All right, welcome to this explainer. Today, we're taking a massive deep dive into a company that is quite literally trying to rewrite the rules of global transportation. I'm talking about Uber Technologies. Now, if you think Uber is just that app you frantically refresh when you're running late for a flight, well, it's definitely time to update that mental model. We're going to unpack their colossal August 2026 earnings, explore this highly futuristic pivot they're making into autonomous vehicles and drones, and really break down exactly how Wall Street is analyzing this massive transformation. So here is our roadmap for today. We'll kick things off with the Q2 2026 financial results. Then we'll move right into their autonomous vehicle strategy. From there, we'll look at drones and strategic partnerships, examine the current Wall Street price targets, weigh the key risks to consider, and finally, wrap it all up with the final verdict. Let's jump right in.
Okay, Section 1, the Q2 2026 financial results, where the main theme is absolutely profitability over growth.
Starting with the hard numbers that just dropped on August 5th, the top-line metrics establish the sheer financial scale Uber is operating at right now. I mean, a GAAP earnings per share of $1.17, that is a staggering 41% beat over consensus estimates. Revenue is sitting comfortably at $14.19 billion, which reflects a really solid 12% year-over-year growth. But, what you should really take away from this is the mind-boggling volume of human movement happening on this platform. With 208 million monthly active consumers and nearly 4 billion trips completed in a single quarter, put that into perspective, that means over half the globe's population practically took a ride in just 3 months. Uber's operational footprint is, frankly, virtually unmatched right now. But the true headline metric, the one you absolutely need to pay attention to, is a record-breaking $10 billion in trailing 12-month free cash flow. This heavily emphasizes the company's incredibly successful pivot away from those old days of just burning cash for user acquisition toward massive, sustainable profitability. It gives them an absolute war chest to fund the future. However, and this is where it gets interesting, despite all these record numbers, the initial market reaction was actually pretty mixed. The stock actually declined about 3 to 6% in after-hours trading. So why exactly did that happen? Well, Wall Street is hyper-focused on margin growth. Because their Q3 profit guidance came in just slightly below expectations and margin expansion slowed to just 30 basis points sequentially, investors got a little nervous. This introduces this really fascinating tension between incredible cash flow and slowing margin momentum that we are going to keep exploring today. Moving on to Section 2, the autonomous vehicle strategy, building the AV platform. Wall Street is watching super closely to see how Uber actually deploys that $10 billion war chest into autonomous mobility. And I gotta say, the execution speed here is breathtaking. On August 19th, Uber made history with their very first European autonomous ride launch in Zagreb, Croatia, powered by Pony.ai. And they are definitely not stopping there. CEO Dar Shahi is pushing hard for a Tokyo pilot by late 2026, and the overarching, incredibly ambitious goal is to be live in 15 global cities by the end of the year. They are moving so aggressively to make robotaxis a global reality. Now, to truly grasp their strategy here, we kind of have to rethink Uber's entire role. You see, Uber doesn't actually want to bend the metal and build the cars themselves. No, they want to be the platform layer. This means providing the essential operating system, the matching tech, the routing, the customer interface, that seamlessly connects riders to any available autonomous fleet, whether that fleet is built by Pony.ai, Wave, Lucid, or Nissan. Basically, if autonomous vehicles are the hardware of the future, Uber wants to be the indispensable software that runs the whole shebang. All right, Section 3, drones and strategic partnerships, moving goods and luxury. So Uber's multimodal empire covers literally every angle of logistics right now. Take their incredibly futuristic partnership with Zipline, for example, which is aiming for 1 million daily drone deliveries for Uber Eats by 2029. I mean, just imagine a drone dropping a burrito straight into your backyard in a matter of minutes. It's like something out of a sci-fi movie. But that's not all. Consider the absolutely colossal $14.8 billion offer to acquire Delivery Hero, which is going to push Uber's delivery presence into 99 global markets. And finally, they are scooping up Blacklane to really corner the premium chauffeur and executive travel market. They are systematically building an empire that covers every possible transportation need at every single price point all across the globe. Let's look at Section 4 now, Wall Street price targets and the bullish consensus. With billions in cash and this whole sci-fi roadmap unfolding right in front of us, Wall Street actually sees massive upside potential. Despite the stock being down roughly 8% year-to-date, largely due to broader market anxieties, the current price of $78.04 sits pretty far below the average analyst target of $101.50. That implies a roughly 30% upside from current levels. And for the most optimistic analysts out there, that high target reaches all the way up to $150. Drilling down a bit into those numbers, the sentiment across major firms is overwhelmingly positive. According to 50 different analysts polled by S&P Global, the consensus rating is a very solid buy. Top-tier firms like TD Cowen, Mizuho, and Bernstein are confidently setting their targets well above $100. Even high-profile commentators like Jim Cramer have emphatically stepped in, declaring Uber a great long-term stock. The institutional belief in Uber's platform strategy is just incredibly strong right now. Which brings us to Section 5, the key risks to consider, the bear case. Of course, no explainer would be complete without taking a hard look at the earthly hurdles standing in the way of this huge futuristic vision. Investors absolutely must weigh these key risks. First off, there is the existential threat of pure autonomous competition. Think about it. If companies like Waymo or Tesla, with its highly anticipated cybercab, allow users to hail a ride directly from their own apps, could they bypass Uber entirely? Uber argues that they're the essential platform partner, but hey, the risk is definitely real. Second, the regulatory battles simply never end for Uber. They're currently fighting NYC Local Law 52 regarding gig worker classifications, which is a battle echoing globally right now. Add in that slowing margin expansion we talked about earlier, plus a bit of a valuation disconnect where the stock has underperformed despite record cash flows, and well, you start to get a clear picture of the very real challenges ahead. Finally, Section 6, the final verdict, synthesizing the sentiment. Synthesizing all this complex market analysis really comes down to a clash of fundamental strength versus future uncertainty. On one side, the bull case points to a light capital mobility giant that's generating a massive $10 billion in free cash flow, brilliantly positioning itself in the AV and drone sectors, all while trading at a historically cheap valuation. But then, on the flip side, the bear case counters with some genuine anxieties over those slowing margins, the endless regulatory battles, and the looming existential threat of pure autonomous disruption. So I leave you with a final, absolutely critical question to consider over the next 12 to 24 months. Execution is everything. But can Uber seamlessly integrate all these massive acquisitions and successfully pivot into the autonomous operating system of the world? Or will they be disrupted by the very technology they are so enthusiastically embracing? Thank you so much for joining me for this explainer. Keep learning and stay focused out there.